I think this comes up a lot. And the question always is, should I pay off my outstanding debt before I start investing in the stock market? Unfortunately, it's not an easy question with a yes or a no answer. In the next couple of minutes, I'll break down what I think is best for your individual situation and your individual debt that you're sitting on. Before we go any further, if you find this video to be helpful, informative, and valuable, please like and subscribe. Now, I'd like to try to make a point here that if you have debt that is over what the S&P 500 returned over a specific time. So say for example, I've looked up the S&P 500 returns for the past 20 years. So on average, the S&P has returned 10.326%. You can see I just typed it into Google. Google gave me this. There's actually huge breakdowns of how this number is calculated, but for this type of video, I just want to give you the average. Again, some years it's been up as high as 20-30%. Some years it's been down as high as 20-30%. But if you continue to invest and you continue to hang on over time, and in this case over a 20-year period, you would have had an annual return of 10.36%. Now, let's look at your credit card. How much are you paying in interest on your credit card? Probably over the 10.36%. Now, if that's the case, why would you put money in the stock market to gain, at best, 10.36%? Again, over a fairly long period of time, it could be 5, 10, 15 years, that it averages out to that number. But why would you put money in the market when you can just invest in your credit card debt and make, so to speak, 20, 25, 27, 29%, whatever your credit card is charging you for that debt? I'm pretty sure, unless you are a hedge fund manager and you work on Wall Street, you are not going to be making more than this 10%. This is a benchmark that many hedge fund managers, many mutual fund managers actually try to beat. So if you can just invest in the debt, pay the debt off first, and then put the money into the stock market, that would be very beneficial than just putting the money in the stock market and leaving your debt outstanding on your credit card. I know what you're saying, but I want to save for a rainy day. What if something happens? As you're paying off the credit card debt, you're building a space on the credit card that if something happens and you need money, you have the money now on the credit card debt. You have the room on the credit card to get yourself back into debt at the 20-something percent. That's fine. I mean, it is what it is. If you need the money, if you need to do that, go do it. But I don't think it's in anyone's best interest to invest into the stock market when their credit card debt is being charged a rate of 20, 25, 29, who knows how much. You're not going to beat this S&P number. So my recommendation is just take the money that you were going to put in the market and just pay the credit card off. And then once you get the credit card paid off, let's put the money now into the stock market. Below, I have a more detailed account of how you can take money and invest it in the stock market. This is not that video. This video is basically to talk to you about managing your debt and how to manage your debt as best as possible. Okay, after all that being said, And after all my talk about don't invest, put all your money into your credit card debt, it's not the end of the world if you open up an account and maybe put a small dollar amount into that brokerage account. This day and age, you can open up a brokerage account with as little as $100, and in that case, you can continually invest month after month after month. You can do as little as $10. I have a link below that goes into this a lot more detail than what I'm saying now. I'm just saying that if you do want to invest and you do want to open an account and you do want to invest in the market, there is a way to do it. I would, if I had credit card debt that was 25, 30%, I would spend the majority of my money paying that debt down. And then again, maybe getting a feel for how a brokerage account works, how the market might work with small amounts of money. This way, once your credit card is paid off or paid down, you can then start dumping money into the brokerage account. You're already in the habit of how to do it. You have a little bit of feel on how it works, so things are better down the road when you have more money. Again, everyone's individual circumstance are different, so what I've given you is the average circumstance. Now, your circumstance may be different. However, I think what I've said today could prove very valuable to you going down the road. If you agree, please like and subscribe. And in the meantime, have a great day.